Good morning, everyone. It's Thursday, the 9th of July, and in news this morning, gold smashes US 1800 on Hong Kong concerns. Last night saw gold smash through the much anticipated US $1,800 barrier, reaching 1817 before settling to 1810 and holding the important breakthrough. Silver rallied even more strongly, up over 2.5%, but didn't quite break through the US $19 barrier, sitting at 1885 at the time of writing. The USD fell and the AUD rose to nearly hit 70 cents, taking some of the shine off the night of Aussie gold and silver holders. The night was also a strong one for Bitcoin and other cryptos, with the languishing XRP Ripple finally leading the charge, up over 11%, matched only by Cardano in the 10 cryptos Ainsley Wealth trade. The reason, as always, is not always clear, but it did seem to be fueled by the growing US-China tensions and the threat of the US forcing a de-pegging of the Hong Kong dollar. For those not across this, part of what makes the Hong Kong a stable economic powerhouse despite its Chinese ties is that the Hong Kong dollar is pretty much tied to the USD in a Hong Kong 7.75 to Hong Kong 7.85 channel managed by their own pseudo-central bank, the Hong Kong Monetary Authority, HKMA. There are a number of means that facilitate this through Hong Kong's special status around trade and effectively open swap lines with the US. The Trump administration, in retaliation to the new national security legislation imposed by the CCP, has threatened to revoke this. Without that free access to swap USD and HKD, the HKMA would lose the ability to defend that peg. The implications for businesses and investors alike would be enormous. Markets haven't gone completely nuts on this, as the chances surely are still on the side of prudence prevailing. But prudence and Trump are not always bedfellows. The HKMA CEO described this move as apocalyptic, and one that would hurt Trump as much as China, explaining, "With Hong Kong's financial system closely integrated with the global economic and financial systems, any move that hits our financial system would also send shockwaves across the global financial markets, including the US. Confidence of international investors in using the USD and holding US financial assets could also be undermined. Ultimately, this is just one of many drivers for the flight to the safe havens of gold and silver we have seen, particularly since September 2018, when things started to go wrong for the Fed. This all comes in the same week we got to see the World Gold Council's latest ETF inflows data for June and H1 2020. From their summary, gold-backed ETFs recorded their 7th consecutive month of positive flows, adding 104 tons in June, equivalent to US $5.6 billion or 2.7% of assets under management. This brings H1 global net inflows to 734 trillion or US $39.5 billion, significantly above the highest level of annual inflows, both in tonnage terms, 646 tons in 2009, and US dollar value, 23 billion in 2016. To put this strength of demand into context, H1 inflows are also significantly higher than the multi-decade record level of central bank net purchases seen in 2018 and 2019, and could absorb a comparable amount of about 45% of global gold production in H1 2020. The next chart is the ETF flows chart. The sheer amount of gold that has entered these new vehicles is staggering when looking at since inception and the parabolic nature of it now even more so. And the next chart is assets under management. In other news, can our regular customers please note that we have, after 6 years today, put our freight charges up as we can no longer wear the price increases from the carriers, and also the cost of insurance has jumped as well. We're also employing a new calculation method which is as follows. For gold and platinum, there's a $15 base charge plus 0.6% insurance on the value. Silver, an $8 base charge plus 0.6% insurance on the value, but not less than $17. We also pass on the $10 extra we get charged for deliveries to PO boxes. We trust you understand we have held strong for an extraordinary amount of time, and we have benchmarked our new rates to ensure we remain competitive with others also. So that's the news today, guys. Remember, you can catch all of our news at ainsleyBullion.com.au, and for any crypto products, visit ainsleywealth.com.au. See you guys tomorrow.